This is the European edition of Breaking Banks, the world's #1 fintech podcast and radio show. We bring you the European unicorns, startups, founders, regulators, and leaders innovating the rapidly evolving fintech scene today. A truly localized podcast with both English and local language content, with some of the world's most well-known hosts and influencers in the fintech sector globally. Join us every week as we explore what makes the European Union a phenomenal proving ground for many of the fastest growing fintech plays in the world today. Okay, let's roll.
Hello everybody and welcome to another episode of Breaking Banks Europe. This is episode number 169 and I am here, my name is Roberto Capodieci, I'm your host and I'm here with Simon Spencer. He's part of Breaking Bank Asia and is currently the CTO of the company called Appscore, and is busy with some blockchain Web3 project. That's something super interesting. And I'm here also with Emmanuel Daniel. Is a Singaporean, but spending time between Beijing and New York at the moment. He's the founder of the Asian Banker, and he has a book that he wants to introduce to us. Emmanuel, tell us about your book, please.
Roberto, thank you very much. In fact, for the conversation we're going to have, it's the book, The Great Transition, The Personalization of Finance is here. I tried, and I had it published last year, a number of things that I say in the book, like something's wrong with the deposit business that banks, that banks love so much. And then, everything broke up. You had Silicon Valley Bank and Signature Bank, both of which I know quite well. And we've got a lot to talk on that front.
Absolutely. And we are a group of visionary. We can see the future. And it's interesting how experience make people be able to forecast a little bit what can happen without a crystal ball, but with experience in our head. And it is the topics of today. My first interesting point of discussion. Now the transitions. Now I'm gonna read your book, but now we have this movement toward DeFi, crypto, away from what they call CeFi as a central financial institution. And we saw, exactly as you mentioned, the Silicon Valley Bank, but many others also that went down. I'm quite concerned that there can be a domino effect that goes down to the smaller one as we move ahead with time. What do you think? And I will start asking this to Simon. You think the DeFi and neobanks are taking advantage of the recent situation? So people is losing faith in central financial institution and leaving market space open for this new approach to finances.
Look, I think I think most people are just keeping their head down at the moment. I think the real issue is sort of the issue around inflation and attempts to control it, and the view around that inflation is bad, and then there's the wider question of sort of almost that thing that happened with religion of the separation of money and state, or church and state, and sort of what role does the state play in money and regulating money, and so DeFi obviously is a challenge to some of that. And there's this real question of sort of this notion of trust and what is trust, and do you get trust from having a centralized state bank run infrastructure, or can you build trust in a different way with a decentralized infrastructure? And look, we're not at a point where we can really put up an alternative model yet. But it's kind of early days, and I think over the next few years, and it's when I'm talking days, we're talking years ahead. We're going to see people explore different models, and that's this. To me, it's this notion of creating decentralized trust networks, and what does that look like, and how do you prove trust in a decentralized network? Because we've got reasonably good at being able to prove trust, or at least get it to a point where we trust centralized networks or centralized systems. And obviously crypto and DeFi are inherently decentralized.
That's a very good take. And actually, one thing that you mentioned and made me think about the fact that one of the big differences is that money are usually bordered with a country. So like a currency usually is inside the country, regulated by the country, has less value or interest in other country. Most of the crypto are actually international. So I don't know,
Yes.
Bitcoin, to mention one, doesn't matter where country in the world you are, is still one single point. So one of the other difference. But I noticed that many people trying to change and move toward this is actually falling for a lot of scam, a lot of other things, because there is much less protection and much less regulation, where somewhere is even impossible. What is your take on this, Emmanuel?
We are in a great transition, right? That's the title of my book, and that is where the finance industry is at the moment. And we have to separate several parallel developments that seem to be converging, but they haven't converged yet. When we think about all that has been happening in crypto, the technology that is being brought onto crypto, what's happening in decentralized finance, the fraud and the Sam Bankman-Fried and and Do Kwon and all those people have not invalidated the move of the technology itself. In fact, the technology is proving that decentralization is coming along just fine, and that there is a business case for users to buy and sell and trade and stake and leverage digital assets. Now, then there's another parallel development, which is what's happening in traditional banking. And in the last 15 years or so, traditional banking has been a beneficiary of productivity gains in digital finance. And all of that has nothing to do with crypto. But when you think about the fact that when a bank like Silicon Valley Bank or Silvergate Bank is able to have a bank run so quickly that they don't have time to respond, that is a function of digital finance and the speed of digital finance. So all these two elements are sort of converging. Now, we are at a point where the traditional financial people want to blame crypto for all that's happening in traditional finance, and the crypto people, are saying to traditional finance people, "Hey, look at your balance sheet. None of you, Silvergate, Silicon Valley, Signature, none of them had crypto on their balance sheet." Their balance sheet collapsed because of rising interest rates, and the asset side of the balance sheet had a huge hole in it because the funding cost had gone into reverse. And then you ask, what should have the traditional banks have done in order to manage their balance sheet? And then you go back and look at all the regulations that have been put in place. You have the Volcker rule, and then in the UK, the separation of retail banking from commercial banking and capital markets and all that. Today, we are at a point where the regulators themselves have to ask themselves, what do we do with the deposit side of the business? Because the deposit side of the business has never been in question all this time, right up to this month. When you think about it, there were players like Vernon Hill in the US who built an entire system over a 20-year period. Commerce Bancorp, being the most efficient collector of deposits, and then putting it out to the capital markets instead of lending it. And he was very profitable for many, many years. And today, the thing that you cannot do is to be an efficient collector of deposits. And then when you look at what's happening in the UK and in Europe, the neobanks, their proposition is, we are the most efficient collector of deposits because of digital technology, because of frictionless and so on. And today, that's not a very good proposition anymore. It's a scary proposition if the receiving financial institution does not know what to do on the asset side of the book. So we are if we piece it out and look at each sliver for what it is, then we start making sense of where we are. We haven't reached any form of inflection point, as it were, but we need to understand what it is that we're dealing with.
Yeah, right. And there are many aspects, as you mentioned, that brought the situation to where it is, and how those are approached by new models of finance. And in fact, I was thinking, it's possible to regulate DeFi and all the new bank in a correct way if regulator had even our time to stay after the bigger accident that we just witnessed recently, meaning that looking after 3 or 4 big banks is a difficult task. How difficult can be then to stay and regulate and look after hundreds, if not thousands of smaller different reality. Simon, what do you think?
Yeah, look, there's a lot you could talk about here. I think the first step is, the regulatory failure is certainly an issue, and who the regulators are watching and what they're looking for. Ultimately, some of the sort of very public failures, around crypto have just come down to just straight, criminal behavior. It's not the problem with the technology; it's just people who are fraudsters at heart and are manipulating, and seeing opportunity to work in a criminal way to create wealth. And that happens in any industry. And regulators need to obviously be the force that is looking for that. In a DeFi architecture, it's more complex and needs different sorts of tooling. The sort of tooling that can get a bank over the line from a Basel III perspective or Basel II perspective is woefully inadequate if you're going to take that sort of approach and apply it to a decentralized network. So regulators need a much more sophisticated set of tooling. The run on banks that can occur in a completely digital architecture, where you can have bot networks driving manipulation of a currency value, the ability to respond and also understand the full contagion and the impairment of value. It requires an order of magnitude sort of step change in the sorts of technologies necessary. And again, so regulators need to be able to tool up and have those sorts of capabilities. And equally, DeFi institutions need to have those sorts of capabilities so that they can both protect their value and their operations from those sorts of threats. Silicon Valley Bank is an example of a run on the bank that was still driven by word of mouth and some pundits making some comments, which obviously led to a cascade. But it's not. We're not so far away from a similar run on a digital bank occurring, which is purely done with a press of a button and 1,000 bots or more, all moving things around. So in that landscape, the sort of tooling you need from a regulator's perspective is completely different to the sort of tooling that the historical monolithic banks have needed to have.
Right. And it is what you say. I agree with you. And on the first part that you mentioned that what happened in crypto world in centralized places as being mostly, if not 100%, the criminal behavior. And of this 100% criminal behavior, if it's not an hacker attacking an exchange, it will be somebody inside. Inside jobs have been huge, as we witnessed recently, but we can go back to the time of Mongox to see how the trend has been. One of the things of the world, starting with Bitcoin, that probably in the DeFi shouldn't happen, is the fact that the run on banks give a problem to the bank because the bank doesn't have the finance to allow the withdrawal to the people, while in a smart contract the amounts are those, maybe at a small loss, but people should be able to withdraw. The manipulation of price obviously much easier in the crypto world. I want to hear the opinion of Emmanuel on all this.
When you look at where regulators are with crypto right now. Number one, they have a problem defining crypto. Is it a commodity? Is it a security? Is it a token? Okay. Number two, they have a problem with who exactly do they regulate if the whole proposition of DeFi is that it is, it doesn't need an intermediary. However, DeFi itself is still in a journey where, any DeFi platform created, the platform creator is the intermediary and, provider of liquidity and assets and so on. And yet that's a moving target, because eventually the idea is that every user of DeFi maintains his own tokens, his own assets, and so on. Now, if you look at what the BIS has been learning in crypto, let me tell you, the most respected purveyor of crypto is the Bank for International Settlements. I'm totally impressed with the papers that they put out. They totally understand what the issues are. They know where the liquidities, problems in liquidity is, and so on. And they are drawing out a map in terms of how they want to regulate, but it's a moving target. For example, central banks will be allowed to hold crypto in 2025, and then they stipulate, how much coverage you give to cryptos on your balance sheet, and so on. And then corporates, the weightage, the risk profile, and so on. So they get it. What's interesting about crypto is that the technology is moving so fast. You take any one of the crypto assets, Solana, Tezos, Uniswap, there are hundreds of thousands of programmers building applications on them. And central bank digital currency cannot keep up with the applications that are being generated on crypto. The fuel that provides the fuel for crypto has been up to now low interest rates and high liquidity in the marketplace, and that's been taken away from it from this whole technology, and now we are entering a phase where we need to see how the technology evolves without cheap funding. And it will create certain disciplines in the crypto world, who exactly wants to hold on to crypto, what kind of applications they want to create on them, and so on. Now, the problems of traditional banking is totally different and parallel but different. There's a digital universe being created, and it's it cannot be mistaken for crypto. And I think that we should criticize anybody who tries to blame the other side for the other side's problem. So a traditional banker saying all these problems that we are facing with bank runs is created by crypto, and the crypto people saying that that banking and is in no way a reflection of the issues in crypto, for example. In decentralized finance. Now, decentralized finance will move well when it's regulated, but regulating what exactly? That's where we are right now.
Yeah, in fact, I love the idea the regulator steps in and make everything safer. At least there is a lot of people that need to be protected from scams and from a lot of danger that there are in this uncharted territory. At the same time, the possibility that there are in a world that is not forced to follow regulation is interesting. I've been in a bank in Singapore, which is a super technological city recently, and I've been asked to submit information using a fax machine, which is something that I think my father saw last time. There is no more fax machine in the world today. They were saying, unfortunately, is the regulations that consider the fax a valid document in another format that would not be correct, etc., etc. I'm sure that the bank himself is ashamed to ask people to send faxes in a world that is way ahead over the faxes, but they're forced to go through certain pattern just because those are set by regulators. And when it comes to the bridge between, CeFi, centralized finance, and DeFi, we have something very interesting to discuss of a recent event in the world, but we're going to do this after a short break that we are going to take now.
Do you want to be part of Breaking Banks Europe? Reach out and learn more about the opportunity to be featured in one of our shows. With over 1.6 million listeners and counting, Breaking Banks Europe is bound to become the place to advance critical dialogue in Europe and the UK fintech scene. Reach out on Instagram or Twitter at Breaking Banks EU, or go to www.provoke.fm.
And welcome back to Breaking Back Europe. This is Roberto Capodieci, your host. We are at episode 169. I'm here, for those that join only now, with two amazing guests. Emmanuel Daniel, that is a Singaporean, but lives between Beijing and New York, and is the founder of the Asian Bank, and also published a nice book they presented earlier. And with Simon Spencer from Breaking Bank Asia, that is the CTO of Appscore, and busy with some Web3 and blockchain project. We are discussing recent news from the fintech world, so the bridge between traditional finance and all these new DeFi, crypto, mysterious things. And there is a very interesting event that happened recently that make me smile in a certain way. So one of the reasons that let me correct myself, one of the need of all the crypto world is to bridge with the traditional currencies. So one of the emerging product of crypto are the stable coin. Stable coins are the representation of fiat currency into the crypto world. There are several. One that has been quite prominent is still the USDC, made by this company called Circle. That the idea is this: there is a reserve of actual dollars for which every dollar that I have in the reserve, I publish a crypto dollar, right? So now, where I keep all these dollars of the reserve now at home, because the rats is going to start eating it, I put them in a bank. And in fact, what Circle did, put a lot of this cash in several banks. One of the banks that they left a lot of money in, of the reserve for the equivalent of the crypto, was the Silicon Valley Bank. When the disaster happened, the Silicon Valley Bank went in trouble. The equivalent crypto, the USDC, went down up to 91 cents per dollar. So there was a moment of opportunity for people to buy the stablecoin USDC at a discount price. It went back to normal very fast, which is something that is very interesting. But is it possible that for a stable coin to maintain its stability, it needs relying on a fiat and all the method, let's say, of a financial institution? Simon, what is your take on this?
Yeah, look, it's been an interesting fortnight, that's for sure. I think the interesting point around stablecoins is they can suddenly be depegged, and so suddenly it's not as stable as you expect. And I'm a big fan of HBO's Westworld. I don't know if anybody is a listener to it has watched that series, and I was a little shame that it was prematurely cancelled. But Westworld, you go to Westworld, is people in black hats. You can be walking down the street. You can have an experience that's quite safe, but you can also be gunned down in broad daylight. And I think if you're going to be involved in crypto, you're going to visit Westworld. You're in that environment, and you could be fine, but you could also be gunned down in broad daylight as well. So there isn't a stable coin that is. You're not home. You're not dealing with an established capability. There is a degree of risk here, and it is about, we're building trust networks, and trust networks are hard to build, and the tooling around those trust networks is still emergent. And it is great to see the Bank of International Settlement really starting to lay out some really sophisticated roadmaps, that they are roadmaps. And, again, to sort of perhaps mix analogies. I had you in Westworld a moment ago. I'm going to take you to a Dire Straits song. One of my favorites is this 14-minute epic song called Telegraph Road. And I used to listen to it when I used to cycle home from work because it would take me 14 minutes to ride home. And the Telegraph Road, it starts the song with a dirt track, and by the end of the song, it's a freeway. And that's really what we're witnessing here. It's a dirt track right now, and you can get gunned down in broad daylight. But guess what? It's maturing quickly, and it will be a freeway, and it'll be a whole civilization. And so, if nothing else, go listen to Dire Straits' Telegraph Road song, and I think you'll understand the whole evolution ahead of us.
Let me take you right to the answer. Imagine a world where stable coins are issued by banks. Period. Okay, I mean, we just get to the point where every bank in the world, instead of nursing their deposit account, issues their own stable coin. And the competition between banks is on the utility of their respective stable coins, the cross-border utility, the transparency, and the fact that you can exchange stable coins openly. Imagine a time when we arrive at that point. Okay, and remember that you heard this on this program, because that's exactly what I'm saying in my book. So what's happening right now is that banks are finally discovering that the product they love the most, the deposit account, isn't as stable or secure as they always imagined it to be. At the same time, crypto is in a stable coins is in a parallel development where the whole issue of governance, structure, accountability, transparency, and all that is going through its iterations. Okay, and all the different crypto players, the different stablecoin players will have to figure out how do we create trust, and then we arrive at a point where the most trusted players who will be trusted to issue stable coins will be banks themselves. When you look at the elements that the stablecoin players are dealing with, and Circle, by the way, has a very strong governance structure. It's got branded names who are in their board of directors, and that's one reason that some people think that the Fed will protect stablecoin over Tether, for example, and stuff like that. We don't know how that's going to evolve, but over time, there will be a bank somewhere that will wake up one day and say, you know what? Why don't we issue stable coins?
Yeah, this is interesting because the ultimate stable coin will be the CBDC, the central bank digital currency, right? Because
not a given.
Not a given. Yeah, well,
I spent half my year in Beijing, and I've traveled to the Caribbean, where I've spoken to central bank governors. I've been to Uruguay and Spain. Spoke to the central bank governor there, but they had a CBDC experiment, and guess what? There is no uptake. So all the conversation, I'm a firm believer that CBDCs will pass because the technology just can't keep up with what's happening on the stablecoin and crypto front, and for central banks to persuade ordinary people, to make that transition. It takes a lot of marketing that none of them are investing in it.
Right.
And stable coins that are already gone live, they haven't been able to move between pilots and reality. And then the big question of central bank digital currencies is that if you have a very successful central bank digital currency, what are you going to do with your normal commercial banks? So right now, many of the central banks are saying, "Oh, don't worry, we will use the commercial banking system to distribute, our central bank digital currencies." And then, it's a solution looking for a problem, and then they're going to be scratching heads and saying, now that we've got it live, one or the other has to give. The commercial banking intermediaries have to give, or something has to give with the central bank digital currencies that we know. And all along, as they are building that, stable coins and crypto is going to evolve, and DeFi is going to evolve, with passion, because you have hundreds of thousands of application developers working on them.
Right. Yeah. No. I mean, in terms of not having the same value of the main currency, the central banks, they cannot, $1 with $1 or doesn't matter how, is cannot unpeg. But in effect, there are, in the current world, there are many forms of currencies that people trust. I think gift cards, for example, gift cards of very large corporations are actually cash. In fact, many scammers demand payment in gift cards because gift cards are actually liquid money, and those are circulating in a way that probably can mimic the cryptocurrency world in a certain way. They're issued and then they can be exchanged later. But let's hear Simon on this topic as well.
Yeah, look, one thing I sort of touched on earlier was sort of the regulatory response is obviously going to change, and it's great to see what the Bank of International Settlements doing, but stable coins are essentially part of a trust network, a decentralized trust network, and so if you want to get confidence in that network, you really need to look at sort of approaches like the network sciences, where you use graph theory to understand the nodes of the network and the distribution and the inferred trusts and so forth, and that's a significant shift in sophistication, but that's what you're going to need in a decentralized market. You needed it actually with monolithic banks as well. When you had to look at your interest rate risk to the banking book, and you needed to look at the potential that your bank could be impacted by some sort of contagion from a counterparty. So it was never truly a monolithic response where you only had to worry about how much capital you had to set aside as a monolithic bank. But with a DeFi, based architecture, you need to have a full understanding of the complete network, and I think we're starting to see the regulators, and we're starting to see that sort of tooling start to be put in place, and it is about starting to shift the thinking around from thinking about regulating this as a group of sort of centralized monoliths to actually as a fabric that needs to be understood as a complete architecture.
Beautifully said, Simon, because what I say in my book is that we are now in the markets economy. In the markets economy, when one person trades with another, there's a buyer and a seller, a winner and a loser. And you've got to maximize the transaction in that, maximize your benefit in that one transaction. When we move to the network world, that there are not necessarily winners and losers. And the value of a transaction is in the network, as Simon says. So the rules are changing, and that's where we will find the stability of, the monetary system in a digital world.
Yeah, there will be an hybrid. For sure, there's going to be a co-living and a moment where each side learns from the other side. I'm sure that there are a lot of innovation brought in by all the crypto world that can do very well into the traditional finance. There are a lot of changes that can actually bring better results, and vice versa, actually. And this is even bigger than the previous one. There is a lot of lesson learned by the traditional finance that the new wave of new banking, mostly crypto DeFi, should pay more attention of and learn from. And being regulated properly, I think, is the first step. In fact, one question that comes out of this is, what is your take on the fact that, and if you have an experience or just an opinion, are countries that are supportive of cryptocurrency experiencing a boost in the regular standing due to the rise of DeFi and new banks in their borders? Meaning that I saw like places like Singapore, London, or other places that are really Dubai. Dubai has been incredible in the last few years on really give all the government support in terms of regulation, in terms of opportunities for all this innovation. Is this actually making a difference to the traditional finance and the economy of the country? Emmanuel, give us your opinion.
The thing about Singapore is that it's taking a tentative view on crypto. I think the Singapore regulators' position is that they would like as many players to be domiciled in the country, but it doesn't necessarily mean that they will be licensed or allowed to do certain transactions, and definitely will not be given access to the domestic population. They want the technology to evolve, and they want it to be on ground if possible. And I think that to different degrees, Dubai, Abu Dhabi, and other jurisdictions take this kind of a watching brief type of an approach. The ones that outright ban crypto, will not build the community, the ecosystem when it comes about. So there's a kind of a tentative approach by this in these markets, and it has created an extension of the fintech community. So you have funding for a number of these crypto players, and learning as well, which is why can we tokenize some of the assets in our traditional exchanges and see how that plays out in crypto. Actually, Thailand takes an approach like that, and they've been tokenizing a number of their fixed income bonds. It does benefit them as destinations, but there are no winners just now. I think that eventually the winners will be those that make a bold move. And I've been to El Salvador, for example. I was so curious about the position that they have taken in embracing Bitcoin as a currency, and that's the journey too. In that you take the position, you're criticized by the IMF and everybody else. Your creditors think that you can't meet your obligations. You meet your obligations, and then I ask people on the ground in El Salvador, would you accept crypto? And those who say they will. And I say, what gives you the confidence to accept crypto? They say that it just has to be that both sides of your balance sheet has to be in crypto. So if your income is in crypto and your rent pays in crypto, you're fine. Then you've created a closed ecosystem. And so just by observing how these ecosystems are evolving and becoming larger and becoming integrated, that's where we will see the revolutionary developments in the future. And when they come about not because they got one answer right. It's because they've been building it over a period of time.
Yeah, right. But that's like most things in life, right? Nothing happened overnight. But I agree with you. Yes, there is a good that comes with getting adapt. I've been living in my adult age already, the change from local currency to the euro in Europe. And I thought people would never adapt to the new currency. And in fact, even the government took like a several-year plan where both currency was going to be valid. And I've been surprised how fast people shifted from one currency to the other. I thought like mostly old people, etc., would, never leave their local currency, the idea of the value, the spending value to move to euro. But I underestimated European people. Has been a very interesting shift. So this will happen to other things. Simon, your opinion, take or experience about countries that are more supportive about cryptocurrency compared to those that are not.
Yeah, look, just going back to El Salvador for a moment there. It is interesting as a experiment, because that's what it is really. And I was reading today that one of the leading opposition papers just recently ran a poll that gave a 91% approval rating to their president, and a strong sense of pride around their financial services industry. And it is an experiment, and as DeFi grows, nations like El Salvador and others have the potential to be a real force multiplier. But it's early days, and it could equally go pear-shaped with potentially disastrous or very different outcomes. A useful way to see this is, I don't know if you remember the movie Arrival, and I think Arrival as a movie was one of the most interesting science fiction movies of probably the last sort of 5-10 years. And in Arrival, there's this really cryptic alien language, and it takes you're halfway through the movie before you find out that the language is because the aliens have this non-linear view of time, and that is a defining thing in their technology, and that leads to them seeing the world in a very different way. This sense of time being non-linear. And similar to this, organizations and countries that are investing in this new national language, this national financial services language built around Bitcoin and DeFi, these concepts are very different to traditional monolithic concepts and fiat concepts. And that tooling that we're starting to build is a little like that sort of non-linear language that the aliens had, in a sense. And it's the adoption of these capabilities that I think over time will have a profound impact on the way we manage money, the way we manage risk, the way we build trust. And I think those changes are going to be somewhat subtle at times, and they might be sort of far-reaching into the way we run our societies, the way we provide social goods, and so forth. And I do think there is that potential that countries that invest in this new type of architecture, in this new type of way of seeing money, and decentralized industries will have significant competitive and social benefits.
This is a very interesting analogy, actually. I feel deficient for having not make a movie analogy so far, but that both of you made it, and they're very good. Yeah, and I think, which is the alien in my life? So where are the aliens where in bringing in new technology, new methods that are difficult to understand to me and actually representing the future? It is for sure is something that is a good exercise everybody should do, and go there and study more these things, because probably that's where the future is. Many times it's difficult to understand the reason, the why, and the how if you don't understand the basics of things. I look how many people is thinking Elon Musk is a terrible, manager of businesses, and in the meanwhile is actually doing things that many people don't understand why. Is interesting to see where the traction of things is going. Anyways, it's been an amazing chat with both of you. Thank you, Emmanuel. Thank you, Simon, for being with us. And this is the end of the episode. Yeah.
One point, Roberto. All things considered, everything that Simon says, I'm in total agreement. Just one little addition: the country that will transform the future of the finance industry, or future of finance, will be the dysfunctional country. Remember, I said that. Okay, it won't be.
No, I take this. Where there is a problem, a solution is the best innovative things that comes up. But that's correct. Thank you.
El Salvador, embraced crypto, and that's why the U.S. will eventually make the policies that will transform finance out of dysfunctionality and not out of purpose. Remember, I said that.
Okay, so we have two things to look at: dysfunction and aliens. And when we see a dysfunctional alien, that's for sure a treasure to go and take. Again, thanks to both of you. Thanks to all the people watching us. I'm impatient with myself that I am not the best that I can be. But we'll meet again at the next opportunity we're going to have in Breaking Banks Europe. Thank you very much to everybody. Bye-bye.
Cheers, guys.
Thank you. Thank you very much.
Thanks for listening to Breaking Banks Europe, a Provoke Media podcast in cooperation with FinTech Stage. Don't forget to tweet us out, shout out, or post to the team at Breaking Banks EU on Twitter. If there's something or someone you'd like to hear on our cast, let us know. See you next week on Breaking Banks Europe.